The global economy in 2024 is at a crossroads. Two giants, the United States and China, cast long shadows on the world stage. Their decisions will shape billions of lives. This rivalry is far more nuanced than a zero-sum game. It presents challenges and opportunities globally. The United States has long been the world's economic superpower. China's economic ascent is remarkable, now the world's second-largest economy. This shift has profound geopolitical implications. China builds influence through the Belt and Road Initiative. The rivalry is also a clash of ideologies and governance systems. China's entry into BRICS has sent shockwaves through the global financial system. Coupled with its gold reserves, China aims to challenge the US dollar's dominance. By backing the yuan with gold, China seeks to increase its reserve currency appeal. BRICS includes Brazil, Russia, India, and South Africa, representing significant global economic output. China's leadership in BRICS promotes its economic interests and challenges the global financial system. The new development bank rivals the World Bank and IMF, underscoring China's ambitions. Gold's historical association with wealth and stability bolsters confidence in the yuan. China's long-term goal is to establish the yuan as a major global reserve currency. Across the Pacific, the United States faces its own set of economic challenges. The Federal Reserve's aggressive interest rate hikes, aimed at taming soaring inflation, have slowed economic growth and raised fears of a recession. The stock market, a barometer of investor confidence, has been volatile, reflecting uncertainty about the future. The Federal Reserve's rapid-fire rate hikes, the fastest in decades, have been a necessary but painful measure to curb inflation, which reached a 40-year high in 2023. The rising cost of living has put a strain on American households, particularly those already struggling to make ends meet. The housing market, a key driver of the U.S. economy, has also cooled as mortgage rates have climbed. Despite these challenges, the U.S. economy remains resilient. Unemployment is low, and consumer spending, which accounts for a significant portion of economic activity, has held up relatively well. However, the Federal Reserve's delicate balancing act, trying to control inflation without triggering a recession, will be crucial in the coming months. Market expectations for a rate cut in 2024 reflect a belief that the Federal Reserve will be able to engineer a soft landing for the economy, bringing inflation under control without causing a severe downturn. However, this is a difficult task, and the outcome remains uncertain. The rivalry between the US dollar and the Chinese yuan is at the heart of the economic competition between the two superpowers. The dollar's status as the world's reserve currency gives the United States enormous economic and geopolitical leverage. However, China's growing economic might and its efforts to internationalize the yuan are gradually chipping away at the dollar's dominance. Increasingly, countries are using the yuan for bilateral trade and investment, reducing their reliance on the dollar. The rise of the yuan as a potential reserve currency poses both challenges and opportunities for the global economy. The outcome of this currency competition will depend on the relative strength of the U.S. and Chinese economies and their policies. The economic rivalry between the United States and China is playing out not just in traditional areas like trade and finance, but also in the realm of technology. Both countries recognize that technological supremacy is crucial for economic competitiveness and national security in the 21st century. From artificial intelligence and quantum computing to 5G networks and semiconductors, the race for technological dominance is intensifying. The United States, with its Silicon Valley ecosystem and world-renowned universities, has long been at the forefront of technological innovation. However, China is rapidly catching up, investing heavily in research and development and fostering its own tech giants like Huawei, Alibaba, and Tencent. This technological competition has implications far beyond economics. It's also about control over data, strategic industries, and even military superiority. The U.S. government's recent restrictions on Chinese tech companies, citing national security concerns, highlight the geopolitical dimensions of this rivalry. The stakes in this tech war are high. The outcome will determine which country sets the standards for the next generation of technologies, shapes the global digital economy, and potentially gains a strategic advantage in the future. The economic rivalry between the United States and China has spilled over into the realm of trade, disrupting global supply chains and reshaping geopolitical alliances. The trade war initiated by the Trump administration, though somewhat eased under the current administration, has left its mark on the global economy. Tariffs and trade barriers have increased costs for businesses and consumers and fueled uncertainty in the global trading system. Beyond tariffs, the US and China are increasingly using trade as a tool of economic statecraft. They are forging new trade deals with allied countries, seeking to reduce their reliance on each other and strengthen their respective spheres of influence. The Biden administration's Indo-Pacific Economic Framework, for example, is seen as an attempt to counter China's growing economic clout in the region. These shifting trade alliances are reshaping the global chessboard, creating new winners and losers. Countries caught in the middle of this rivalry face difficult choices as they navigate the competing demands of the two superpowers. The global trading system, once characterized by multilateralism and open markets, is becoming more fragmented and unpredictable. One of the most concerning aspects of the US-China rivalry is the potential for economic decoupling, a scenario in which the two countries become increasingly separated economically. This could involve the creation of parallel supply chains, separate technology standards, and reduced investment flows between the two countries. While complete decoupling is unlikely in the near term, the trend towards greater economic separation is undeniable. This is driven by a combination of factors, including national security concerns, ideological differences, and a desire to reduce economic dependence. Decoupling would have profound consequences for the global economy. It would likely lead to higher costs for businesses and consumers, reduced efficiency, and slower economic growth. It could also exacerbate geopolitical tensions and make it more difficult to address global challenges such as climate change and pandemics. While some degree of decoupling in strategic sectors like technology may be inevitable, it's in the best interests of both the United States and China, as well as the rest of the world, to maintain a degree of economic interdependence. This will require dialogue, cooperation, and a willingness to find common ground on issues of mutual interest. The economic rivalry between the United States and China presents both challenges and opportunities for global businesses. On the one hand, businesses operating in this environment face heightened uncertainty, geopolitical risks, and the potential for disruption. They must navigate complex regulations, shifting supply chains, and the risk of getting caught in the crossfire of the US-China rivalry. On the other hand, this rivalry also creates opportunities for businesses that can adapt to the changing landscape. Companies that can diversify their supply chains, develop innovative products and services, and navigate the complexities of operating in both the US and Chinese markets will be well positioned for success. The key for businesses is to adopt a strategic approach that balances risk and opportunity. This requires careful analysis of the geopolitical landscape, a deep understanding of both the US and Chinese markets, and a willingness to be agile and adaptable in the face of change. As we look ahead to the rest of 2024 and beyond, the question of which country will emerge as the dominant economic power remains open. The United States, despite its current challenges, still possesses significant strengths, including its innovative capacity, its deep and liquid financial markets, and its network of global alliances. China, on the other hand, has its own advantages, including its vast domestic market, its growing technological prowess, and its ambitious Belt and Road Initiative, which is expanding its economic influence across Eurasia and beyond. Rather than a decisive victory for one side or the other, it's more likely that we will see a continuation of the current trend, a world characterized by both competition and interdependence between the United States and China. The global economy will be increasingly multipolar, with other regional powers like India, the European Union, and Japan also playing important roles. In this new multipolar world, traditional measures of economic dominance, such as GDP growth, may no longer be sufficient. Other factors such as technological innovation, control over strategic resources, and the ability to shape global norms and institutions will become increasingly important. Moreover, as the world grapples with global challenges like climate change, pandemics, and inequality, economic success will need to be measured not just in terms of material prosperity, but also in terms of sustainability, inclusiveness, and the well-being of all people. The rivalry between the United States and China will undoubtedly continue to shape the global economy in the years to come. However, it's important to remember that this is not a zero-sum game. There is room for both countries to succeed and for the rest of the world to benefit from their competition, as long as it is conducted within a framework of rules and cooperation.